Hello and welcome to this video. In this video, we're going to take you a little bit behind the scenes and ask one of those questions you've probably be asking yourself, which is, should I go limited? And especially, should you go limited if you are a creator? Now, we've got a special guest for this one. I'm going to introduce her in a moment, but this video is going to deep dive into those questions you're probably asking yourself. So this one is not to be missed. Hello, my name is Aaron Patrick. I am a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks Chap on the internet, head of accounts here at Boffix, and also that podcast host, which goes live each and every Monday morning at 8:30 for Ask the Accountant. And with me today, we have a special guest. She's a creator herself, small business owner. More importantly, she's got some questions relating to the world of should you go limited. So, Elizabeth, would you like to tell the world who you are?
Hello, thank you for the introduction. So my name is Elizabeth Warburton. I'm a creator, but primarily a presenter. I work freelance for TV and various different social media channels, along with my own social media platforms as well. I have been freelance for 13 years. I was in musical theatre before I started presenting, so the world of self-employment is all I've ever known, really. However, I'm now starting to think about whether I should be making my business into a limited company. I have no idea kind of really where to start, which is why I came to Aaron, and hopefully he's going to sort me out and answer all my questions.
Exactly. Yep, that's definitely what we're going to do for you today. So I think before we go into the whys and wheres and talk about you being a sole trader, first of all, give someone a bit of an indication of what your day-to-day work looks like. Being a creator, how does it go from day to day? Because from what I can tell, every single day is different, right?
Absolutely. That's one of the reasons why I do love what I do, but it also comes with its own challenges as well. On an average day, I'll either be on set at a studio filming for various clients, or I'll be on location filming. I primarily work within the home and lifestyle sector, so I'm classed as what you would say a property expert. I have a small portfolio of properties. I also buy and sell and trade properties. And I help from first-time buyers find something all the way through to highly esteemed investors find their next investment project. So I really do have a varied role, which is why no day is the same, but it's great fun.
Yeah, it sounds it as well. And I think that's where we came across you, to be fair, because one thing that definitely stood out was we were going through YouTube as you do, and you were kind of presenting what most would see as quite a dual subject. So it was about property taxes and property elements that normally is the sort of thing that people don't really get that kind of excitement from. But you were brilliant. Like, you were really bringing together and explaining to people what the pitfalls were and everything else. And I think it's safe to say you were elevating the content. So how did you get around? So where did you find that kind of that element of it? Where's your secret sauce that's kind of got you the gigs that you've got so far?
Yeah, so I think having the investment background has really helped. Being niche is a really big thing in the presenting and the content creation world. That was kind of my advice that I was given as I entered the world of creators. And so that was kind of the advice that I took, and so far it's really served me well. I think rather than just being general and specific and talking about anything and everything, finding a few things that either you're really interested in as a hobby that you would like to create into a career, or go with what you've kind of already got and work from that. So for me, that was kind of what I already had. I was going through a mentorship program, and it was in the middle of lockdown. And I'd come from entertainment TV. And so I thought, okay, how am I going to merge both careers together. And so that was where the idea of niching down into the property content came from. And it's taken 3 years now to build up the clients that I have. I'm very lucky, and it's going really well. But as you said, some of the topics aren't the most exciting, but it's how you approach it and what you do with it that makes it count. And after all, you're a creator. The idea is you're supposed to bring the creativity to what could be a relatively dull topic for a lot of people.
Definitely. And I think what you show a lot of, and this is what we see through a lot of our clients, like that creativity of yours is always there. That's your skill, right? That's what you come and that's what you bring to the table when it comes to what you're selling. And a lot of people are in your shoes where it's that entrepreneurial element of it that's the hardest bit, right? And it's finding your way through there. You said there about looking at niches and trying to go down. And I think that's something that a lot of people should really learn from you and understand from you if they're trying to take that first step and trying to go from maybe employed, or they've got a part-time job or whatever it's going to be, and they're looking to go into full-time freelance work that effectively is what you are, right? And that's what you're doing. I think that's what a lot of people have got to take from what you're saying, basically.
Yeah, absolutely. I think it's really important to establish where you want to take it, as opposed to just starting and clutching at straws and not really having a little bit of an angle. You might go 6 months and decide that actually that's not for you, but at least you've started and you've gone to a certain point, rather than just kind of edging a little bit towards a lot, if that makes sense.
It certainly does. And it seems like you've kind of jumped in 2 feet, which is brilliant to see. So speaking of jumping in two feet, and speaking of kind of taking this from just a hobby to basically your livelihood, talk us through how you've been doing it so far in terms of your taxes and being that sole trader and running your business as a sole trader. How's it been so far? Give us a kind of insight of what's it been like for you, and then we can talk about kind of what options you might have.
Yeah. So I'm getting to a point now where I'm bringing on videographers, bringing on editors, bringing on a VA, hopefully very soon, for someone to handle my diary, because it's manic. But basically, up to now, I've just been self-employed, and I've been in the entertainment category, because I was transitioning from musical theatre and dancing. I was a dancer. So moving from that into the creator space and into the property space, there seems to be various different ways that you can possibly save or expense different things. Now we're in different categories. And also, as I'm starting to pay people out, I feel like there's maybe a bit of a grey area where, if I'm being paid a lump sum, am I going to be taxed on that whole lump sum? But then I'm paying out 3 people with a salary from that money. It's kind of getting a little bit complicated for me now. Numbers, admin, spreadsheets, my idea of hell. So I need somebody to kind of steer me in the right direction and help me to create a real business with longevity, not just taking a wage here and there and it all just being a little bit ad hoc. I want to get more structured and more systemized and go with a more professional approach. I think it even looks more professional to a client as well if I'm showcasing a limited company as opposed to being just self-employed individual.
Brilliant. And what I love about what you're saying there is, and not enough small businesses are doing this. You're looking at it as a whole picture. You're not just considering it from the tax benefits, because yes, going limited company, there's taxable benefits, and we'll talk about them, and you will find that it's positive for your cash flow, having a tax efficient vehicle to be able to put your business through. But actually, in your case, it's more about everything else that's coming with it. It's about the fact that you're going to look more professional, where you go for those bigger contracts. It's going to be about the fact that you're going to protect yourself as you take on more risks, for example, taking on new staff and everything else that goes with it. So I like the fact that you're taking this as an opportunity to go, you know what? Yes, I need to transition my business into the next thing. But I'm not just doing this from a tax point of view. I'm doing this from the fact that there are added benefits there. And I think that's really good. So talk to me about your accounting procedure as it is now. So what do you do? How do you get by? Because I think your story is going to resonate quite a lot with what the rest of people kind of in the creative industry is going to do. Just run me really top end of how you would normally go about getting that tax return completed each year.
Yeah, I'll be very honest. I have an awful system. I have my bank account statements at the end of each year. And I go through what is an expense, what is a salary, what is food expenses, what is travel, all of that. I keep my receipts in a file in some plastic wallets, and I hand it over to my lovely accountant. And at the moment, that's literally it. I don't know anything else other than the numbers that I get given at the end of each year and to pay the amount of tax that I'm told to pay.
And it's right to say that's once per year that you pretty much have that interaction with, right? You would send that one year, all of your statements, all of your receipts, etc., go through.
Yeah. I have a limited company for my property portfolio, so that also is a different time of year, but that's two separate things.
Yeah, brilliant. So mainly that's the biggest thing that kind of sways people to or from being a limited company. One of the things that you have as a benefit of being a sole trader, and the reason that people like being sole trader, is how simplified it is. Because as you just said there, when you've only just got to worry about one time a year that you've just got to basically collate all your information and pass it through and hope for the best in one to a better term, then it's really straightforward for you, and you can just get on the day-to-day workings and building your business. And again, it may not be as tax efficient, but the simplicity can be a real big benefit for people who just don't want to have that added complication. Whereas if you are looking at a limited company, you are going to be looking at quite a few complications that you've got to consider. And one of the main things is the fact that actually that one time a year and one submission is at least going to be more than one time. And the reason for that is because it's not just you that's going to be taxed going forward. It'll be you and your limited company at the same time. So you've already got another date that you've got to worry about. You've already got to still consider your personal tax point of view. And maybe you're in a position where you have got an accountant to look after it for you, but you still need to be aware of those dates. You still need to be understanding that those are going to be critical dates that you want to get them ready. Also, we would really highly recommend not just leaving it all to that last moment, not just having it all in one bank statement, not just sending them over as receipts as they go along. Bookkeeping becomes really important for a limited company, which adds that extra bit of complication, and also gives you that ability or that fear that you might have more work on your hands than you had before. So before we kind of go any further, for anyone who's thinking about going limited company, you do need to think about the fact that from an admin side of view, you're going to have more work to do. But on the plus side, as you said, now you're transitioning into that next stage of your business, then really this is the time to be thinking about putting that admin first and figuring out how you're going to deal with that admin now, so that gives you a chance to build that business and to grow that business, which is ultimately what you're planning to do with it anyway, isn't it?
Yeah, that's definitely the plan for kind of the next few months. I think this next tax return, I'll still keep myself as a sole trader, and then we'll move on from there.
Brilliant. All right, let's talk about some of the benefits though from being a limited company in terms of these tax positions, and we'll keep it fairly light, but let's talk about what you do get benefit from. The first thing is the tax actually as itself is actually lower than it is from a sole trader. Now, government has gone through stages of trying to bridge the gap, and if we were having a conversation 5 years ago, we'd have a much bigger difference between a sole trader and a limited company. Currently though, there's still a slight benefit from being a limited company, but it has been reduced. But one of the things to remember that you're going to have to think about as a sole trader or as a limited company as opposed to sole trader is that you actually get to split out when you make those payments into two different chunks. And that can be really beneficial for cash flow purposes. Because at the moment, you're probably in a position where you have to pay 31st of January and maybe even 31st of July with what's called a payment in account. Yeah. And that payment account is one of the worst taxations that are available to anyone in any form of business. But when it's go into a limited company, one of the big benefits you're going to have is, yes, they're taxed relatively similar to one another, but you don't have to worry as much about that payment on account. So straight away, that's a nice positive cash flow benefit to you and your business. And then what we would also talk about is the fact that you're in more control about what tax you actually get taxed at any point. Because as a sole trader, one of the disadvantages is that every penny you earn in a given tax year, you have to pay tax on it. You don't have a choice on that, right? If you've earned it in a tax year, you have to declare on a tax return. Therefore, there's going to be tax to be paid. Whereas as a limited company, because it's not just yourself being taxed, it's your limited company being taxed, then actually we get to be really more savvy with the way and the amount of tax that you have. And because what happens is, and we'll talk about why in a moment, but you'll get the ability to be taxed on what's dividends, and dividends themselves, you're going to be in control with of how much dividends come in and out of a company. Therefore, if you're in a position where you want to be leaving as much money in that business as possible to help it grow, and you're looking to make sure that you've got opportunities to get the next opportunity costs and everything else, then you're in a position to be in a lower tax position than you would do it if you had to take all of that tax out at one point. So it becomes an opportunity if you actually have a bit of tax planning, being savvy with it, and that gives you a chance to go, actually, this is a chance for me to be able to prioritize what I need. Is it that I need to leave money in the business, or do I need money out for maybe looking to get a mortgage or whatever the reason's going to be to get more cash out of the business? But at least you're in control of that, right? And that really helps small businesses take that next step, because from a cash flow point of view, you're not being taxed on every single penny that you earn.
Interesting.
So we've kind of talked briefly about the tax situation, but let's just understand exactly why it is so much beneficial. The main thing is the fact that your limited company, instead of having to go through a personal tax return and then having to go through higher rate brands and all this, that, and the other, and it gets really complicated and you're trying to figure out what tax you're going to be taxed at any point in time. Well, from a corporation tax point of view, it's much more simplified. The maximum it can be is 25%. And that's if you're a really high earner in your business. Majority of small business like yourself will be more like the 19, 20%, maybe 21%, something like that. So straight away, you're trading a potential 45% or 40% tax position to a 20 to 25% tax position. So that's always really, really good. But the complicated bit is the fact that that's not the end of the story. You as a person, as an individual, wants to actually be taking money out of the business. So the extra complication is the fact that it's not just that corporation tax you need to worry about, but it's also your personal tax bill. And that's where these dividends come into play. Mainly what you're going to do is you're going to take a nice small salary, say about £12,000, and that salary will be on your tax return. And then you're going to top that up with dividends. And every time you take a dividend out, that's 7.5% or 8.75% as it is now, that you're going to have to then leave and pay when you put your personal tax return in going forward. So effectively, if you think about putting all those two figures together, then majority of it's going to be very, very similar in terms of how much tax is going to be paid. But the advantage is that you're going to pay some of it when your corporation tax is due. And that's 9 months after that year end is going to be. And the rest of it is going to be paid at that 31st of January, as you have done before. So you should be in a better position from actually the cash flow itself.
Okay, interesting.
So tax-wise, probably roughly the same. There is a benefit for being a limited company. We'll talk about whatever expenses and stuff you could put through, but it's more that cash flow. That's what you're benefiting from. You don't have to have that payment on account. That's going to be the most painful part of it for everyone that's going forward. And for any small creator out there, any business out there that's not in that payment on account scenario at the moment, that's always the bit that's going to be the most painful. And you'll ask anyone who's gone through it, that first year when you hit payment account and you suddenly your tax bill's not just going to be X amount, but it's going to almost double over time. That's the bit where it gets really, really painful. So to eliminate that is a huge benefit to any business.
Okay.
Awesome. So the limited company itself, then, let's take away the tax side of things, because I think at the end of the day, there is going to be taxable benefits for you. And if done properly and if run properly, we can definitely ensure that you'll be in a better tax position overall. What about all these extra benefits that you've got? So you've kind of mentioned it before about the fact that you're going to have that protection. And I feel like that protection is always underlooked at. And the most important thing about that protection is the fact that that limited company itself is its own separate legal entity. When you're trading at the moment as a sole trader, it's you that's signing those contracts. It's you that's taking on that liability. It's you that's at risk. When you do it as a limited company, it's that limited company that's going forward to put that into place for you. And I feel like that's a huge benefit for someone like yourself in your sort of industry, because let's be honest, like there's quite a lot of risk that you'll be taking on to fulfill those jobs, isn't it?
Definitely. Yeah, there's a lot of risk involved. Um, there's also a lot of expenses involved on top of it as well, which I think would work better under a limited company blanket.
Yeah, definitely. And you're also legitimizing those expenses as well. Whereas at the moment for a sole trader, for a lot of the time, it's you're hopeful that they're going to be an expense and you hope that they're going to go through. But when it comes to actually preparing the accounts, most of your accountants out there would have to go through and actually start putting private proportion on those expenses. They'll have to reduce them by X, Y, Z. And ultimately it means that even though you've spent quite a lot of money in producing the work that you've done, you may not necessarily get all of those expenses through. But as a limited company, we can legitimize them. We can make sure that your telephone bills are in the limited company name. We can make sure that if done right, you can look at maybe putting a vehicle through or a commercial vehicle through to help you actually get those costs in. There's some really issues with bringing vehicles in, but if it's done right, there can be some great taxable benefits that you can go through. So it gives you that opportunity to be more beneficial with him. And one of the huge things that you can do as well, especially as you start getting a more mature business going forward, is you can start doing things like paying in pension schemes and putting through pension contributions. And that can be a really, really tax efficient way to reduce those corporation tax bills that you wouldn't have been able to necessarily do as a sole trader.
Okay, so there's a lot of benefits so far.
Exactly. And I think the other benefit that you touched on that is really good as well is legitimacy and making sure that you potentially have an opportunity to be able to go out there and get more work from it. Because seeing you or you producing work and being put forward as a limited company straight away puts you as a very professional outfit that's out there. And that can be almost smoke and mirrors sometimes, but that could be the difference between you actually gaining a new job or a new freelance work than not getting that job in the first place. And I think that's really important, right?
Yeah, it is. It is very important. I think representation of yourself as an individual is overlooked in general in my industry. Like, I've spoken to some amazing creators, but then the business side of their job is just kind of non-existent at all, and it's been the decider of whether or not I'm actually going to work with them, or whether or not I put them forward for something that I wasn't right for. Even just how they have conducted an email, or how they've approached communication through social platforms. I think there's still a lot to be said about validating yourself as a professional and as a business entity, even though everyone has this opinion of social media and creators as just like, oh, they're just posting a video, it's nothing. But there's a real hardworking business side of it that yeah, I think if you can master both, it's an amazing industry to be in.
Yeah, definitely, definitely. So limited company, I think we've gone over a few of the major positives there. I think it's still worthwhile talking about some of the negatives that you've got. And unfortunately, it is still down to that admin. From your point of view, you kind of hit the nail on the head when you gave your story about how relatively easy your self-employed situation is. One time to pass over the information. Yes, you've got to collate that data, but realistically, that's as far as it's got to go. And if you're in a position where you're looking to do your own, then actually you could probably get away with it, because you could probably look at getting together that tax return and maybe mimic what was done last year and trying to put them in the right boxes. And realistically, there's an opportunity for you as a solopreneur and small business to complete your own personal tax return. Unfortunately, though, when it comes to limited company, there's just too many moving parts for majority of people to be able to complete their own. Because what you're doing is you're trading that simplicity of just doing a one tax return to actually having to complete a what's called an abbreviated set of accounts. It goes to a place called Companies House. You're going to have to do a confirmation statement to Companies House as well. You have to do what's called a CT600 from that goes to HMRC, and you've got to do a full set of accounts to go with it as well. And I can tell already that all these numbers and all these things that have been thrown at you just make it so complicated to go forward. So
Not
you are
for
trading it. Yeah. So you are trading going forward simplicity for complication.
me. Yeah, I would wholeheartedly agree with you. And to me, that is worth spending every penny on somebody who can do that much better than I can.
The other thing you're going to trade is also not just being able to leave it realistically to that last moment. You're going to have some form of real time information, really, if you want to get the most out of a limited company. So it's
Yeah.
trading that idea of just wait until the end of a year, compiling it and send it over, and really start thinking about bookkeeping as a priority going forward. Now, here on this channel, we talk all the time about a solution called QuickBooks, but there are others out there. You've got Free Agent, you've got Zero, you've got all sorts. But ultimately, a good piece of bookkeeping software is going to help you keep on top of those numbers, keep on top of what's going on. And it's just going to give you better understanding, or at least your business advisor accountant, a better understanding of what's going on so they can advise you properly. Because one of the differences, again, between limited company and sole trade and the complications is there's so many more moving parts that if you're not keeping on top of it, you can land yourself into a situation where you're not being as tax efficient as you possibly could be.
Okay, yeah. So would you recommend then incorporating something like QuickBooks in from the very beginning, if I was to move over to a limited company, and also maybe a bookkeeper or somebody to help with that? Or do you think you don't need a bookkeeper and an additional person if you are integrating software such as QuickBooks?
It's a great question. And I think that's the ultimate kind of goal, really, isn't it? Is not need to have that extra expense and push it through.
Yeah.
And I feel like with software, the whole point of the software is to make it as simplified and straightforward to use. What I do recommend for a lot of clients out there is to give it a go. Because what I found from majority of people, the software is definitely at a stage now where you will 100% be able to go out there and produce enough of a data, enough of financial solution, enough financial bookkeeping to be able to do the job you need. The question you then need to do is what value does that to take from you? That 1 hour a month, 2 hour a month, 1 hour a week, whatever the time frame is going to be for your business, you really need to start thinking about, well, can I be spending that time better elsewhere? And that becomes a much more of a integrated conversation to have. And I think at that point, the only way you can really make that decision is if you know yourself how much work and value is involved with doing it in the first place. So we always recommend to our clients, at least if they've got the opportunity, to just have a go, just see about it, because we can always come along and clean it up and sort it out and take over at any point. But really, you guys need to understand if that's the part that's worthwhile to you. Because if I'm being completely honest, as an accountant and business advisor, that's our most expensive service and solution we can offer our clients, because that's the most hands-on, that's the most work that we have to do to get to that point. So normally eliminating that cost, if possible, at the early stages for a business can be beneficial. But it
Okay.
all depends on your, how it goes for you in that first stages.
Okay, so not only can you provide the accountant side of things, but you can also provide the bookkeeping element as well. Uh-huh.
And you'll probably find that with most accountants out there, because that's, for us accountants, that's the best way we can give you that real time information, by having good quality data that we can work with.
Okay, interesting. I'd love to chat about what some of the expenses and things that you can put through as a creator, as opposed to what I've always done in the past. So, like, for example, being a dancer, we could put through things like gym classes, exercise, memberships, quite a lot of appearance stuff, gym kits, uniform, for like audition shoes, things like that. and ways to kind of keep us to our optimum health and fitness as much as we could as a dancer. As a creator, what are those types of outlets like?
Yeah, it's a great question. And it's a really good timing of a question as well, because we've had quite a few tribunals going through lately and quite a few opportunities where clients have kind of had their eyes open to what is available. Now, if I give you the letter of the law of what HMRC expect, they want to make sure that every expense you put through is wholly and exclusively for the purpose of the trade. But unfortunately, especially in your view, in your world, that's not going to be the case. Like, there's so many different things out there that yes, you're going to need to have for your business, and at the same time, and not wholly and exclusively for the purpose of the trade. So let's go through the sort of admin costs that every business should be putting through straight away. So make sure your telephone bill is in the business name. Number one priority, get that through there. Make sure that you do have an actual separate business account and it's going through there and the disciplines there, because that's going to be important. Make sure all your travel costs are through. So mileage is a really, really good way of being able to ensure that you can get some good costs coming through. So make sure they're coming through. Also make sure that you've got any subscriptions that you're paying for to get content out there, get that through as well. And then when it comes to content creators and going through from that, really, you just want to be looking at what you need to be able to do your job. HMRC's favorite thing they'll ever do is about matching. So basically, the matching concept is the fact that if there's an income stream coming through and there's an expense that relates to it, then we're winning that argument if it's allowable or not. So if you've had to spend some money to be able to actually produce a bit of content that you've there, then at that point we've got opportunity. So all of the equipment you need to get yourself in there, so the cameras and the lights and everything else, of course they're going to be allowable. And then from your point of view, if there's a particular standard of presentation that you need to get to be able to get a particular client and bring that work through, or the client's requested that you have a particular standard of style of clothes or makeup or whatever it's going to be, then that'll be allowable as well. We've even had some situations where clients, especially depending on what their creativeness is going for and what they've gone, and if they've gone down, say, the OnlyFans route or anything like that, that cosmetic surgeries now become allowable as well, which was completely not the case before. So it's changing tides at this point in time, and there is opportunities to put more cost through as before. I think the most important thing to do is whatever costs that you put through, you want to be in a position where you can make sure that it relates to some sort of income at the top. As long as we're relating to income at the top, then we should be absolutely fine. And again, because of the change in tides, there's been more opportunities to put more cost through than ever before.
Yeah, it's so interesting to hear, because when you are on screen all day, whether you're whatever gender you identify as, you do still want to look your best and you want to look presentable. But as you say, it's relative to what you deem that to be. Nails, roots done, makeup, new outfits, so that you're not wearing the same blazer in every video. It really adds up, personal expenses, and it gets to a point of where I'm like, wow, like 50% of my salary goes on maintenance and upkeep, and that's not me sounding high maintenance. It's actually what most women do spend their money on, in general. Hair upkeeps, facials, makeup, clothes, shoes, bags, manicures, pedicures, like the gym, fitness, gym outfits. It's a never ending expense. So it's just it's interesting, and it's good to know, I guess, what you can put through. Is there like a threshold, like a certain amount, like you can cap, so that you're aware of kind of like a budget throughout the year or anything like that you can do?
Yeah, so from your point of view, you're going to be in a better position than most, because your clientele are actually requesting, or at least have this expectation, that you're going to come smartly dressed, you're going to come in a business attire. So there's going to be more expenses there that are going to be allowable from your particular point of view. And it's all governed by that income stream, as I said before. If there's an income stream that relates to it, then you're going to have a better argument with HMRC that that is an allowable expense. The only time I'd be really cautious about this is a term called benefit in kind. And what benefit in kind basically means is if there's a form of expense that HMRC have deemed as something that should be taxable on your payroll, then that's going to add an additional complication to it. So the best example I can think of this is private medical insurance, items like that. Gym memberships potentially could fall into this as well. Definitely if you're going to be giving yourself like a car or anything like that. What tends to happen with that, and if you take yourself out of your personal business at the moment and you're in the more corporate world and you're working for a bigger company, then they would want to incentivize you with these cherries and give you these toys and give you these extra perks for being employed. And that becomes a taxable benefit on your salary. And you want to avoid all of those situations as much as possible. So as long as you don't trigger those benefit in kinds, and there's a list on HMRC that you can go through to have a look, as long as you stay away from that, then if we can put a big enough argument together that your business, that your expense needs to be there for business, then we're okay and we've got protection there. And that's where the accountant comes in, because what my recommendation would be is that every expense you can think of, to put it through that business expense. And then what will happen is at the end of the year, it's up to the accountant to go through and look at what transactions you've put there to see what's allowable or not. And what we tend to do is if we can't expense all of it, we may look to apply some sort of private proportion to it. A great example of that could be if you've got some travel expenses you need to do because you're going out to to America or something for a client, and they want you there for 5 days, but your trip is for 7 days, there may be an argument that only 5/7 of that particular cost should be allowable, going through from there. And that's what the accountant comes along at the end of the year to make those decisions for you. So
Okay.
realistically, what I would do, make sure you're putting those expenses through, make sure they're in that business so that they can be looked at the end of the year.
Okay. And what about cars? Um, what's the situation there with either a limited company like a business or self-employed?
Yeah, if you get away with a commercial vehicle, no problems. There's very little taxable issues if you can get away with a commercial vehicle. So I'm not sure a van would really work for you at this point in time, but if you could get a van, absolutely no problem. The only other thing that's beneficial at the moment is considering an electric vehicle. HMRC do have some slight incentives to make it sure that having an electric vehicle can be beneficial to you. But most of the time, from a limited company point of view, keeping cars out of it, if they're not electric and they're not commercial, is the best way. Because again, if we go back to that scenario about if you're in a corporate world, then they want to be taxing those people as best they possibly can. And the problem you're going to have is you're going to be subject to that same tax, that same benefit in kind. You just want to stay away from it as best as possible.
Okay. So I, for example, do a lot of location work where I go to drive to like a luxury house and I do a video tour of said house and then I drive back. So we always add travel expenses on top of my day rate. So that is either to go via a train or I go and I drive and I add on mileage. So would that be something that wouldn't be able to happen if I was in a limited company?
You'd still be able to do it, but I would definitely recommend using mileage instead. I think one of the things that people don't understand about mileage is it's designed not only to give you the money back for the fuel that you've spent, but also for the running costs of that
Of the
vehicle
car.
as well. So 45p per mile is probably what you've heard of. That 45p is supposed to be contribution to the insurance, contribution to road tax, contribution to the vehicle itself, and supposed to reimburse you for your fuel as well. So in theory, that 45p should be enough to be able to remunerate you for using that car. So I would charge the client for the 45p going forward, and I would also, from your point of view, put that as an expense to the business for 45p as well, because ultimately it's your car that's being used at that point.
Okay, okay. So you wouldn't put the car through itself, you would only put the mileage through.
Unless it's electric, but that's not going to be ideal for everyone, right?
Yeah, I have looked into the electric initiative. It's like 100% tax deductible, is that correct?
So the difference is on both scenarios, you have the option to bring the vehicle into the business. It's just that if it's non-electric, that benefit in kind will be so expensive that you just won't benefit from it. So the idea would be that if you could bring an electric car in, you have a very, very low benefit in kind. I look at kind of percentages wise, it's a 1% for electric car, and it could be 26, 36, 40 odd percent for a normal vehicle. So
Wow.
they're hugely different. And basically, as long as you can kind of justify the electric car, then there are benefits, because then you can put the whole car through, you can put all the electric through, you put the vehicle through, the tires through, the repairs through, and everything else. But that's only going to work for you if you can justify that electric car.
Okay. And what about then, just from personal perspective, self-employed, if I was to buy a car, secondhand car for 10 grand on Auto Trader, would that be able to go through as a business expense?
You could definitely put it through, but most accountants would rightly put a nice private proportion against it. And we would urge on we would be as prudent as we possibly could be, and we will probably put as much as the private proportion as we possibly can. Because the likelihood of you buying a car that is wholly and exclusively for the purpose of the trade is low. And again, HMRC are not happy about cars at this point in time. So they're one of those ones where we don't tend to push it with HMRC, and we would urge our side on caution when it comes to how much of that would be allowable. But we would certainly put it
Okay.
for the business, just probably see quite a lot of it be deducted at the end of it.
Good to know. Good to know. What about home bills? If you're working from home a lot, which I do, all my admin, everything, script writing, learning, everything is at home. What is deductible from that sense, from in comparison to personal to limited company?
Well, I've got good news and bad news on this one. The
Oh,
good
great.
news is HMRC already have you covered with use of home allowance. So the idea of use of home allowance is exactly what you're saying there, that you're running your business from your home. So you should be paid for that time, right? And you should be able to put that through as an expense. The bad news is that use of home allowance is very stingy at this point in time. Now, we're hoping HMRC are going to start upping that rate at the moment, but currently it's £321 per year in expenses. So it's literally not worth the money it's on. But there is a way that you could put your own use of home allowance in there, and there are calculations you could do. My only advice against that would be the fact that that's the sort of thing that HMRC are very much looking forward to in seeing changes, because it's almost an invitation for them to have another look into what else you're doing. So we tend to tell people to try and just use that £321, the use of home allowance as it is at this point in time. Try and use it and accept the fact that you're getting something back for it. You can put cheap wins in there, so your telephone bill, your internet cost, if you can separate them out, and especially if you can get them in limited company names, you can put those costs through. But the actual heat and light and everything else that goes with it, really, you want to be using use of home allowance to cover all those costs.
Mhm. And that's the same for a limited company as well as personal name.
It certainly is, yeah.
Okay. So is anything, what would office expenses be classed as?
So this is where the limited company does have that benefit in terms of, we were talking before about legitimizing costs. So going back to your telephone and your internet costs, well, if you can get them in the limited company name, then it's definitely a limited company business, right? You may have to pay a slightly different rate than you would do if it was personally, but you tend to find, especially in the internet world, you have a more reliable connection that comes with it. So this is where the office costs can come into items like that, where you can put through those costs through, and you can put items like that in. And then really it's just about making sure that office is comfortable, right? So have you got a suitable chair? Have you got a suitable desk and monitors? All those sort of items will all be allowable. We can all put those sort of items through and keep it running from there. But again, the use of home allowance is supposed to be a opportunity for you to have an office in your home.
Hmm. Okay. Okay, good. There's definitely advantages to both, isn't there? But it's kind of steering that it seems limited company does seem to be the more long term beneficial option.
Yeah, it also gives you more options about making it into a full blown business, right? One of the things that you're going to have the benefit of is who has ownership of that business. You may have more, your dreams may be that you will be the sole owner for it for the rest of your life, and that's absolutely fine. But what about later down the line if you wanted to add another business partner to it, maybe someone who could do the videography for you, or if you're looking at someone who's another presenter and you want to partner up? When you've got a limited company, there's so many more options. You can look at offering shares out, you can look at offering full-time employment. You've just got that benefit of that business being able to grow and ultimately may even be acquired at some point. And because it's a limited company, there's a lot more options for you to see that. So I always talk to clients about the fact that limited company is you taking your business to that next stage. You're taking it to that ability to be able to be limitless into what you want to do with it. Well, unfortunately, with a sole trader, you're always going to be held back at some points because there's always something holding you back in terms of maybe legality of it or the protection of it. And if you've got that protection behind you of a limited company, then your company can just keep growing and growing and growing.
Okay, awesome, great. So if somebody was to, well, if I was to want to start setting myself and making that transition into a limited company, how would I go about it? Like, where would I start?
So technically there's more than three, but there's three really popular choices at this point in time. The first one is find a YouTube channel, a YouTube video. We've done one ourselves, and just go to company's house and set one up yourself. The second one, which I would advise more of, is the fact that you can go with third parties. Like Tide is a great example, who's a business bank provider. You could go through them, apply for a business account through them, and also apply for your new limited company through them as well. Great solution that we love. Or your third option is to find yourself a business advisor and accountant. Most of them, like ourselves, we don't charge any extra for creating the business itself. It's all about that long-term gain and trying to build relationships around there. So we would make sure that you've got it set up in the right way at the right time, make sure that you've got things considered like share options and who's going to be the owner and everything else that goes with it, and give you the advice you need to make sure it's set up correctly.
And you guys are experts now in the creator field, aren't you? And creator books.
Yeah, exactly. We're creators ourselves, so we kind of fell into it, and that gave us the opportunity to be able to get lots of clients that are in the same panel of it. And it's important, right? Because that means we can keep on top of any other items that have changed throughout from HMRC's point of view, anything they're being really tight on at the moment, anything that they're being more relaxed on. Just having that insight yourselves means that we can make sure that not only do we benefit from it from our own personal books, but also it means that we can make sure all the clients get the right advice as they go forward.
Yeah, that's really great. That's really great. It's definitely something I'm going to start to properly think about over the next few months and move forward once my next lot of accounts are done and due.
Brilliant. And what about yourself? Where can people find you if they want to find someone to elevate their content? Because as I've already said at the beginning, for me, that's how we found you. We know that you're one of those creators out there that really do help people push it forward.
Yeah, I'm excited to work together once I'm back. I know we're going to try and get some dates booked in. It's going to be great. But yeah, I've got a new website launching in a couple of weeks, which is elizabethwarburton.com or lizziewarburton.com. They're both going to be going to the same place. Same with my social medias, Elizabeth Warburton, on LinkedIn, on TikTok, on Instagram. I do have a Facebook page, but I'm not particularly active on there. I don't know who's still involved in Facebook, really. Are you?
We have a page, but you're exactly right. Yeah, no, it's
Yeah, it's like you kind of have to, can't you? You can't quite give it up, but yeah, it's there. But yeah, always very active on all of those. Pop me a message, even if it's just for any advice on starting out as a creator, or we have a full recording studio. I have one available just kind of outside of London in Wokingham. And it's television grade, big studio. We've got podcast rooms. You can come in and create your own content, or we can create content for you. We script write, we produce, edit it all in house, and we also do location shoots. So we are busy bees, but we love it. And yeah, we're always here to help.
amazing. And thank you so much for giving up your time today to talk to us about your trials and tribulations about thinking about going limited company. But I do think you're making the right choice. I think, yeah, this is your time to grow, especially with everything that you've got going on at the moment. So yeah, I think it's the right time for you.
Yeah, I agree. And I think I'm definitely going to take a look at QuickBooks that you mentioned, um, to see how I can integrate that and trying to simplify the process myself. But maybe we can have another chat about that at another time.
We certainly can. And in fact, that's a perfect intro to what we're going to be talking about next time we sit down with Elizabeth, because we're going to be talking about how QuickBooks can be right for you. Because I think creators out there, and especially small businesses, they have it really difficult, and it's really difficult for them to know when it's the right time to move on to QuickBooks. So we're going to sit down and have a look at QuickBooks in a little bit more detail. But as always, thank you so much for joining us today. Don't forget to like and subscribe and all of that sort of stuff. Thank you for all the continued support here on the channel, and we'll see you in the next one again. Thank you to Elizabeth. Cheers.
Thanks for having me.